All right, so today we've got global trade tensions. Yeah, those are back, and they're sending some real shockwaves through the markets.
And it's not just the big picture stuff either.
No, not at all.
Individual companies are having to make some pretty interesting moves. And of course, the whole tech world is, well, tech always changes.
Always changing. But before we get into all of that, we got to talk about the market reaction.
Oh,
I
absolutely.
mean, the S&P 500 down 10% in just 3 weeks.
Yeah, that puts it right into correction
It's
territory.
just that the culprit, you guessed it.
Trade tensions, yeah.
Specifically, President Trump's latest threat, 200% tariff on French champagne and EU spirits.
That got everyone's attention. I mean, investors, economists, everyone.
For sure, yeah. Speaking of economists, Larry Summers, he's calling these tariff policies a self-inflicted wound.
Mm.
And he's pretty worried about potential recession risks and long-term damage.
Yeah, and he's not alone. Mohammed El-Arian, he called the speed of this correction eye-popping. And he thinks we're going to see some downward revisions to those U.S. growth projections for 2025.
Makes you wonder what's going to happen next year, right?
It does make you wonder, yeah.
Now, there's a bit of a counterpoint here, I guess.
Oh,
Justin Wolfers over at Brookings, he says a recession isn't a sure thing just yet.
okay.
He says the economy, it's still got some underlying strength. But he's also concerned about the chaotic economic policies coming out of the White House, saying they could cause businesses and consumers to hold back on their spending.
Well, that makes sense. I mean, who wants to spend big when everything feels so uncertain?
Exactly. And just to put some hard numbers to all of this, the S&P 500, it closed at 5,521 points.
Down from its peak of 6,147 back on February 19th. Oof, that's a pretty steep drop.
Yeah, not good. Now let's shift gears a bit and talk about some specific companies.
Sure.
Integer Holdings Corporation, they've upped the size of their convertible senior notes offering.
Oh.
Yeah, it's now up to $875 million.
Wow.
And get this, those notes, they're due in 2030. They're also giving the initial buyers a chance to snap up an extra $125 million.
So what's the strategy there?
Well, they're including something called capped call transactions. The initial cap price is set at $189.44 per share. That's like a 60% premium over their last closing price.
So they're betting on their stock doing pretty well in the years to come.
Looks like it, yeah. They're also doing these concurrent note exchange transactions.
Okay, what's that all about?
Well, it involves about $383.7 million of their current notes,
All right.
the ones that are due in 2028. They're basically swapping out older debt for newer debt with a longer maturity.
Makes sense. That way they can spread those payments out a bit, maybe even lower the borrowing costs.
Exactly. Smart move. And they've said they're going to use the money from this offering to, pay down debt, general corporate stuff.
Pretty standard stuff, yeah.
Yeah, keeping things running smoothly. Now, the initial conversion rate for these new notes is about 6.6 shares for every $1,000 in principal. Works out to a conversion price of roughly $150.96 per share.
Interesting. A bit higher than the current stock price, but it shows investors are pretty optimistic about Integer's future.
That's the idea, yeah. Now, there's also a chance we might see some market activity from those involved in the deal, hedging and stuff. That can sometimes cause those short-term price swings we see.
Oh, for sure. Big financial moves like this, they tend to ripple outwards.
Absolutely. Okay, let's move on to something a bit more electrifying.
All right, I'm intrigued.
Electric vehicles, specifically Tesla. British Columbia, they've decided to cut Tesla's EV charging stations and home batteries from their rebate programs.
Oh, wow. That's a big deal.
It is, and it seems like a direct response to some of those recent trade spats we've been seeing. The energy minister there, Adrian Dix, he said most people would support this move after the U.S. slapped tariffs on Canada.
So it's kind of like a tit-for-tat thing.
Yeah, you could say that. BC Hydro, they're the ones running the rebate program. They said they're focusing on Canadian-made goods and excluding, quote, where practicable, unquote, U.S.-made products.
Makes their position pretty clear, yeah.
And just to remind everyone, the U.S. did put tariffs on Canadian goods and energy earlier this month.
Right.
They've hit the pause button on those for goods that comply with the USMCA, but they're set to come back on April 2nd. So British Columbia, they might just be getting ahead of the curve here.
That April 2nd deadline, that's definitely something to keep an eye on.
For sure. Now, this isn't Tesla's first run-in with Canada.
No.
We had that whole Starlink contract cancellation in Ontario.
Right.
And then Toronto kicked them out of their driver incentive program.
And there were those allegations, remember?
Oh, yeah.
About Tesla stores maybe taking advantage of Canada's EV rebate program?
Yeah, there's definitely been some friction there.
Yeah.
And all of this is having an impact on Tesla's stock. It was down on Thursday, and it's taken a pretty big hit this year.
Makes you wonder how it'll all shake out.
Analysts at JP Morgan, they're actually predicting Tesla's lowest quarterly deliveries since 2022.
That's a bold prediction.
They're saying CEO Elon Musk's involvement with the Trump administration is playing a part in all of this.
Interesting. So it's not just trade wars and government decisions. It's also about the perception of a company's leadership.
Yeah, it's all connected. All right, let's switch gears again.
Okay, where to next?
Telecoms. Gogo Inc., they're going to be releasing their Q4 financials tomorrow.
Right. What are we expecting?
Well, analysts are thinking earnings per share will be a bit lower than last year.
Okay.
Same with revenue, but just slightly.
Not great, but not terrible either.
Right. Now, Gogo made a pretty big move back in December.
What was that?
They bought Satcom Direct, and they brought in Chris Moore as their new CEO.
So new leadership, new direction.
Exactly. It'll be interesting to see how it all plays
Oh,
out.
definitely.
Gogo's stock, it dipped a bit on Thursday.
So some uncertainty there.
Yeah, for sure. And analysts, well, they've got their opinions, as always.
Of course.
Roth MKM, Morgan Stanley, JP Morgan, they've all weighed in with ratings and price targets. But as always, their track record, well, let's just say it's not perfect.
Grain of salt and all that, right?
Always, always. Okay, let's talk investment strategies. Cathie Wood's ARK Invest, they've been busy.
Oh, I bet.
Big purchases in Robinhood, Coinbase, and Tempest AI.
ARK Invest loves those disruptive companies.
They do, yeah. Their Robinhood buy was pretty big, about $5.18 million worth of shares.
Wow.
And Coinbase, too,
Yeah.
about $5.21 million, even though Coinbase got booted from the S&P 500 recently.
A contrarian play there.
Maybe so. And they've been buying up Tempest AI all week. That latest purchase, about $1.23 million.
They seem pretty bullish on Tempest AI.
Definitely. They've also been snapping up shares of Ibotta and CRISPR Therapeutics.
And they sold off some of their UiPath holdings.
Yep. Seems like they're always adjusting that portfolio.
And the market never sleeps, right?
Absolutely. All right. Let's head over to the retail world.
Sounds good.
Shein, the fast fashion giant. Their CEO, Donald Tang, he's pushing back hard against any talk of lowering their $66 billion valuation ahead of their IPO in London.
That's a hefty valuation.
It is. But they seem pretty confident.
Well, they've got to be, right? Going public is a big step.
Yeah, absolutely. Now, their IPO plans, they originally wanted to list in New York.
Right.
But the SEC, they weren't having it. So now they're going to London.
Interesting change of plans.
And they're doing all of this despite President Trump's move to axe that de minimis duty-free exemption for Chinese imports under $800.
Yeah, that could really shake things up for them.
Definitely. But Tang, he's talking about their globalized model, diversification efforts, all that. They're trying to minimize the risk.
Smart move. Can't put all your eggs in one basket.
Nope. Now, they're also facing more scrutiny over in the EU.
Oh, really?
Yeah, along with Amazon and Temu. There are these allegations about them selling, maybe dangerous or illegal products online.
The Wild West of online retail.
Pretty much. All right, let's jump over to the crypto world.
Sounds good. What's the latest?
Bitcoin, of course.
Yeah.
Analyst Ali Martinez, he's saying the $74,000 level, that's a key support level for Bitcoin.
A line in the sand, so to speak.
Exactly. He says if Bitcoin drops below that, we might see a pretty big shift in the trend.
Makes sense.
It's been on a tear since January, though, right? From under $17,000 to over $80,000. That's a gain of almost 390%.
Whoa, that's a wild ride.
Tell me about it. Now, there are some positive signs, too.
Oh.
Yeah, Martinez says long-term holders, they've been stacking Bitcoin lately. And a lot of coins have been pulled off those crypto exchanges.
Those are usually good signs for the price.
Yeah, we'll see what happens. All right, last but not least, we got to talk about DoubleVerify.
Okay, what's up with them?
They're under investigation by a law firm called Hagens Berman.
Uh-oh.
Yeah, potentially violating securities laws.
That's serious stuff.
It is. And it's all stemming from their not-so-great financial results and some problems with their brand safety tool for advertisers on, Twitter.
What kind of problems?
Incorrect data being shown for 5 months.
Yikes, that's not good.
No, not at all. And their revenue growth, it's been slowing down. Last year, they had to lower their revenue forecast for 2024.
Ouch.
And their stock price, well, it took a nosedive.
Not a good look.
Nope. And to make matters worse, they lost a major client and a bunch of other big clients they cut back their spending in 2024.
That's gotta hurt.
Yeah, not good.
So what's the investigation gonna focus on?
Whether or not DoubleVerify misrepresented how accurate and reliable their analytics tools actually are, if they did, well, things could get messy.
Yeah, big time.
So to sum it all up, we've got markets on edge because of global trade tensions, companies trying to stay afloat amidst all the chaos, and technology, well, technology just keeps on disrupting.
It's a lot to take in, that's for sure.
It is, but it all points to one big thing. Everything's connected. What happens on the global stage affects individual companies, which then affects investors and consumers.
It makes you think, doesn't it? With all this volatility, how should people and businesses adapt their financial strategies to navigate these, well, pretty crazy times?
Yeah, it's a question worth thinking about.
Absolutely.